Hello, and welcome to the special presentation for the week of April 13th, 2017. My name is Glenn Tompkins, and this week's presentation is entitled Glamour Stocks Revisited. At this stage in the market, we have been in a bull run since 2009. Stocks have been steadily climbing, and many of the stocks in the software are considered to be fairly to overvalued. So how do we determine which stocks are profitable and which stocks are part of the herd mentality? Well, in February of 2014, Dr. DeLito wrote an essay called Glamour Stocks, and this addressed our overvalued stock situation. Let's take a look. We'll go into the software. We're going to go into the tab that says Views. We're going to move over to the essay viewer. All of the essays that Dr. DeLito has written over the years are here numerically by date. We're going to scroll down to the year of 2014, and I'm going to find February of 2014, and the exact date is February 28th of 2014. He wrote the marketing review, and here's his essay, Glamour Stocks. I'm going to double click on it. It's going to take me to that date. I'm going to scroll down. There's the marketing review, and if I keep going down, here's Glamour Stocks. Now, Dr. DeLito wrote, my ability to make money in the stock market improved dramatically after he wrote his formulas for addressing stock value and risk in 1978. He never had much luck picking stocks using PE ratios. They were all over the place, and there wasn't any way to know if a stock's PE ratio was fair or not. He learned that some of the analysts liked to compare PE ratios to earnings growth as a metric, but even that wasn't good enough for me. So I continued to compare price and value for several years and did well, except for there was one stock that bugged me. It was Walmart. Now, he wanted to buy Walmart. His price was going higher, and his valuation formula kept telling him that it was overpriced. He knew that Walmart was growing and making money like crazy, but he never connected the dots until he realized that Walmart at that time was a glamour stock, and Wall Street's heavy hitters were betting on its future. But how could he take that into account? So Dr. DeLito created an indicator called relative value, which looks into the future. It answers the question of whether an investment in a stock at its current price is favorable compared to investing in a AAA corporate bond over a 3-year time period. If the answer is yes, the RV would be greater than 1, but if the answer is no, RV would be less than 1. The mathematical steps that he went through to compute RV are itemized in Chapter 6 of his book, Stocks, Strategies, and Common Sense. Now, at that time, he was looking at Tesla, the quintessential glamour stock of our time, for example. And on that day, it closed at 244.81 with a PE ratio of 165.41. He owned it, but would he buy it? And he said, I dare say you would not if all you knew its price and PE ratio. At that time, Jim Cramer wasn't giving it a buy rating, but he wouldn't sell it short either. The fact was, Cramer didn't know how to analyze the stock. RV, however, gives the VectorVest users the ability to make a reasonable assessment of Tesla's future prospects, which are quite favorable. And that was back in 2014. With a forecasted earnings growth of 58% a year and a relative safety at 0.97 and a relative timing at 1.74, Tesla closed that day with an RV rating of 1.44 and a buy rating. The RV rating of 1.44 said that Tesla was likely to outperform a AAA corporate bond by 44% over the next 3 years. Well, how many glamour stocks did we have in our database at that time? Dr. DeLito created a search that returned stocks with price actual greater than 2 times its value and an earnings per share greater than 1, and he ran it as of last February. He found that a little over 100 stocks were returned. When he sorted it by RV, though, only 13 stocks were found to have an RV greater than 1. This shows how difficult it is for a highly overvalued stock to get an RV greater than 1. Although many of those stocks are currently rated a buy, I'd be very careful with owning any of these guys with an RV much below 1. Folks, this all ties back into earnings is the engine that drives a stock's price higher. When we look at relative value, we look at earnings per share and earnings growth rate on a stock. What I'm going to do is take a look at these two stocks that he looked back in 2014, and we're going to take a look at them now. We're going to go to the Viewers tab. We're going to go to the Stock Viewer. And the two stocks that Dr. DeLito was looking at was Walmart and Tesla. Let's see if they're Glamour stocks today. We'll hit Enter and bring those to the top of the list. Walmart right now is trading at $73.31 with a value of $52.80. So how does that happen? Well, in order for a stock to be an overvalued stock, that just means that people are willing to pay a premium to own the stock at a higher price than what it's worth. And if enough people are willing to pay that premium, it will drive the stock's price higher. But let's go look at that calculation of RV. Ooh, it is currently below the value of 1, which means if I were to compare this to a AAA corporate bond, over the next 1 to 3 year time horizon, that AAA corporate bond should outperform Walmart. Well, that means that Walmart doesn't have right now that good upside potential over the next 1 to 3 years. Let's look at Tesla. Tesla is at $299, where its value is at $37.27. Wow, that stock is grossly overvalued, but that means a lot of people have faith that this stock will go up over time, and they're willing to pay the premium to own it. And as I mentioned, if more people are willing to pay the premium, it will drive the stock's price higher. Well, let's look at RV. RV is at a value of 0.82. Again, that AAA corporate bond over the next 1 to 3 years should outperform Tesla, which means that Tesla doesn't have really good upside potential right now. Let's scroll over a little bit more. Let's look at the earnings per share on Walmart. It's at $4.36. Oh, but they're growing it in a negative manner with an earnings growth rate of negative 3% a year. Whereas Tesla has a good earnings growth rate of 36%. Oh, but they have negative earnings for the year. All right, so now what I want to do is step back a little bit and add two more widely known overvalued stocks to this list. I'm going to come up to the top and I'm going to type in Amazon. I'm sure many of you know about Amazon. And I'm going to type in also Netflix, NFLX. These weren't in that essay, but these are also stocks that I know that are currently overvalued that people can look at right now. Here's Amazon. It's trading at $8.89 with a value of $295.30. Way overvalued. Ooh, but look at the RV above 1.4. This tells me that Amazon should outperform that AAA corporate bond over the next 1 to 3 years by 40%. It has good upside potential. Netflix trading at $143, where its value is $40.88. But it's got an RV above 1, telling me that this stock should outperform that AAA corporate bond over the next 1 to 3 years by 19%. Good upside potential. Let's roll over a little bit more. Look at earnings growth rate. Amazon has got a 36% earnings growth rate. They grow their earnings by 36% a year, and it's got good earnings per share. Let's look at Netflix. They're growing their earnings at a clip of 33% a year and an earnings per share of $1.42 per year. Again, so good earnings growth rate, good earnings, good stocks that are overvalued, that are glamour stocks with the RV above 1. Earnings plays a role. Earnings definitely is the engine that drives a stock's price higher. All right, so now, how can I find more of these overvalued stocks that are in the database? Well, Dr. DeLito created a search. We'll go up to the Unisearch at the top. We're going to go find us a folder that says Searches, Special Searches. And we're going to go find Glamour Stocks. Now, when I run this search, it's finding stocks whose actual price is greater than 2 times the stock value, and the earnings per share is positive. But this search is sorted by RV to bring the glamour stocks of these overvalued stocks to the top of the list. So now, instead of trying to find the glamour stocks first, I just want to find the overvalued stocks in the database. So I'm going to change the sort from RV to our master indicator VST. So now I'm going to be looking at the overvalued stocks that have the best combination of value, safety, and timing. I'm going to run the search. Here are the stocks that are overvalued that are sorted by VST. Move this over, sort it all the way down. But notice that many of these stocks do not have an RV of greater than 1, so they are not Glamour stocks yet. So I decided to do a little test. I'm going to change the date here, and I'm going to go back to our most previous confirmed up call, which happened in November of 2016, November 15th. And I'm going to run this overvalued search as of that date, sorted by VST. Here are the stocks that were found. All right, but again, not all of these stocks had an RV greater than 1. I'm going to do a quick test of the top 10 stocks. I'm going to take it to the confirmed down call that we had on 3/14 of 2017. So we had 6 winners, 4 losers. We had a gain of almost 3.5%, where the market went up 8.49%. Actually, that's the SPX. Let's put in the VVC. And the VVC went up about 6%. All right, and we like to use that as a better representation of broad market movement. So this went up about half the percentage that the market went up, and this is just looking at the overvalued stocks. Notice that Amazon is in here, but that is a Glamour stock. So let's close out of that. Now let's make this list a list to find us some of the Glamour stocks as of the same date. Now I'm going to convert it back to the original sort that made these Glamour stocks, which was RV. Scroll up, find RV. We're going to do it descending, run the search. So now as I run the search as that confirmed up call, I'm finding that 1, 2, 3, 4, 5, 6, only 7 stocks are Glamour stocks because the RVs are above the value of 1. I'll highlight the top one and highlight the last one that's got an RV greater than 1. I'm going to right click, and I'm going to do a quick test of just those 7 stocks. 12.75%. 5 winners and 2 losers out of the only 7 stocks that we found. Amazon is here, NEN, NC, a lot of stocks that you do know about that are overvalued, and look how well they did in that same time period as compared to just looking at overvalued stocks. So what does that tell you, folks? That RV is the key indicator, and if you're looking at overvalued stocks to take advantage of. The moral of the story: when life gives you lemons, you make lemonade. When the market is giving you overvalued stocks, let's make them Glamour stocks. I'd like to say thank you for joining me this week for the special presentation. If you have any questions, please give our product support a call, and we will have a follow-up Q&A session on Monday as well. Thank you, and have a wonderful day.